Hello and welcome. This discussion is brought to you by the experts at Pro Tax Accountant, who are, one of the UK's top accounting firms. Today, we're going to tackle a really serious topic, Code of Practice 9 Investigations from HMRC. Honestly, it's one of the scariest notices you can get from the taxman, and we're going to break down exactly what it means, what your choices are, and how you can get through this pretty challenging process.
So picture this. You're going through your mail, and you see that official envelope from HMRC. You open it up, and this isn't just your standard tax reminder. Nope. In just a few lines, you realize HMRC suspects you of serious tax fraud. For anyone who gets this, it is a moment that can just completely flip your world on its head.
So, what is a Code of Practice 9 or COP9 investigation? Well, it's super important to get this straight. This isn't for a simple, careless mistake you made on a tax return. Not at all. COP9 is the big one. It's the procedure HMRC rolls out only when they suspect you've been deliberately dishonest. We're talking about things like intentionally hiding income, creating fake documents, or knowingly dodging your tax obligations. The gravity of this, well, it just can't be overstated.
Okay, to make this whole thing easier to digest, we've broken it down into 6 key parts. First, we'll talk about the moment that letter lands on your doormat. Then, we'll get into the absolutely critical 60-day decision you have to make. After that, we'll walk through the disclosure process, look at the penalties, peek behind the curtain at how HMRC finds fraud, and finally, talk about the best way to navigate the entire investigation.
Right, let's jump into Section 1. The letter arrives. When you're holding that notice, the first thing you have to understand is that this is not a routine checkup. It's a formal notice that you are under suspicion for tax fraud, and that's a whole different ballgame from a simple compliance check.
So why is this so serious? Well, here's the kicker. By the time you get a COP9 notice, HMRC already has information that points to you deliberately doing something wrong. Let's say, for example, a small business owner in London is taking cash payments but not declaring them. HMRC might have gotten a tip-off, or maybe their fancy data systems found a mismatch between the owner's lifestyle and their declared income. But here's the really tricky part. They won't tell you what they know. The ball is entirely in your court to come clean about everything.
And that brings us to what is, without a doubt, the most critical, time-sensitive part of this whole thing. The second you get that letter, a clock starts ticking. You've got a massive decision to make, and believe me, you don't have a lot of time to make it. You have exactly 60 days, and to be crystal clear, that's not about 2 months. It is 60 calendar days from the moment you receive that letter. This is a hard, non-negotiable deadline. Every single one of those days is absolutely vital as you stand at a fork in the road.
And this is the choice you face. Path 1 is called the Contractual Disclosure Facility, or CDF. If you go this route, you admit to deliberate conduct and you promise to disclose all tax irregularities. Now, the huge, massive benefit here is that HMRC promises not to criminally prosecute you for what you disclose. Path 2 is the rejection route. This is where you deny any deliberate wrongdoing. But this is a really high-stakes gamble, because HMRC will then launch its own investigation, which could turn criminal at any point. And that protection from prosecution? It's gone.
Okay, here's a pro tip you absolutely have to remember. Doing nothing is not an option. If you fail to respond within those 60 days, HMRC doesn't just wait around. They treat it as you actively rejecting their offer. And just like that, they'll start their own investigation, and you've lost that golden opportunity for immunity from criminal prosecution.
All right, so let's say you've decided the CDF route is the way to go. Smart choice. So what happens next? Well, it's not just a one-off confession. It's a very structured process designed to get everything out in the open. Let's take a look at the steps.
This whole journey really has 4 key stages. First, you formally accept the offer, and you've got to do that within the 60-day window. Second, also within those 60 days, you submit what's called an outline disclosure. Third, you then have to prepare and submit a much more detailed full disclosure report. And finally, you get to the negotiation stage where you agree on the final bill for tax, interest, and penalties.
That outline disclosure, it's your first real chance to show you're cooperating. You don't need to have every single penny figured out just yet, but you must give an honest, good-faith summary of what you did wrong. That means explaining what you did, how you did it, if anyone else was involved, the time frame, and a ballpark estimate of the tax involved. Just saying, I underpaid tax won't cut it. Now, stay with me, because the next point is where most people go wrong, and it covers the incredibly high stakes involved.
So, choosing the CDF route does offer you that protection from prosecution, but let's be clear, it doesn't mean you're off the hook. The financial and legal stakes are incredibly high, and you really need to understand them to appreciate just how serious this is.
By admitting to deliberate conduct, you basically give HMRC the green light to look back way further than they normally could. For deliberate behavior, they can go back up to 20 years to find and recover any tax you've evaded, plus interest on top. I mean, just think about that. An undeclared rental income of, say, £15,000 a year. Over 20 years, that's £300,000 in undeclared income, and that's before they even start talking about interest and penalties. It can turn a problem into a financial disaster.
And this chart really spells out the financial incentive to cooperate. See, penalties are calculated as a percentage of the tax you evaded. If you fully cooperate, that penalty could be anywhere from 35% to 100%. But without cooperation, it skyrockets to between 100% and 200%. Let's put that into perspective. On $100,000 of unpaid tax, that's the difference between a $35,000 penalty and a completely crippling $200,000 penalty, on top of the original tax you already owe.
And it doesn't stop there. The risks go way beyond just the money. HMRC can actually publish your name as a deliberate tax defaulter, which can cause massive damage to your reputation. They can freeze or even seize your assets, and you'll probably be put on a special program for closer monitoring in the future. And remember that immunity only covers what you disclose. If they find out your disclosure was false or incomplete, they can still launch a criminal investigation. So you might be sitting there wondering, how on earth does HMRC even find this stuff out in the first place? Well, let me tell you, the days of just hoping they won't notice are long, long gone. They have an incredibly powerful and sophisticated toolkit to work with.
Did you know HMRC has a supercomputer called Connect that cross-references literally over 1 billion data points to find problems? It looks at everything from your bank records and land registry data to your social media posts. They also get info from banks, landlords, and under something called the Common Reporting Standard, they get data from over 100 countries on where UK residents have offshore assets. Throw in whistleblower hotlines and reports from banks, and you can see the net is closing in. Hiding tax irregularities is becoming almost impossible.
Okay, so we've covered the problem, the process, and all the risks. Now let's switch gears and talk about the solution. An investigation like this, it's not something you should ever face alone. Getting to a successful resolution really depends on a careful, strategic, and expert-led approach.
So here's the million-dollar question, right? How do you possibly navigate this minefield? How do you manage the insane pressure, meet all those strict deadlines, and get the best possible outcome while also protecting yourself from the absolute worst-case scenarios?
This is exactly where a specialist advisor becomes, well, essential. They have deep expertise in how COP9 works, and they make sure your disclosure is rock solid and complete, which is absolutely vital for keeping that immunity. They handle all the negotiations with HMRC to argue for the lowest possible penalties, and maybe most importantly, they manage all the communication, taking that immense stress right off your shoulders. Experts, like the team at Pro Tax Accountant, help you avoid all the little traps that could end up having devastating consequences.
So, to sum it all up, a Code of Practice 9 investigation is, without a doubt, one of the most serious challenges you can face as a taxpayer. The stakes are sky high, but it's not an impossible situation. With the right expert guidance, it becomes a structured, manageable process with a clear path to getting it all resolved.
If you, or maybe someone you know, has received a COP9 letter, or if you're just worried about any serious tax issues and you want to make a voluntary disclosure, it is so critical to get specialist advice right away. You can get in touch with the experienced team at Pro Tax Accountant by WhatsApp or phone on 07985 689912, or you can email them at info@protaxaccountant.co.uk.
We really hope this discussion has helped to demystify the whole COP9 process for you. For more clear, practical guidance on all sorts of tax topics, please make sure you subscribe to the channel. Thanks so much for watching.